Hello friends, we will be discussing SEBI Listing Obligation and Disclosure Requirement Regulation, which is simply known as LODR today. Okay, so this portion is applicable for CMA Final Examination 2016 syllabus. Okay, so we will start our discussion listing obligation and disclosure requirement regulations 2015. Okay, see, when a company is getting listed, listing simply means a company is admitting its securities into a recognized stock exchange. So when a company is going to be listed, it will be having, or the company will have to enter into an agreement with the stock exchange, which is known as listing agreement. Okay, so when a company was having, or when a company lists its securities with different stock exchanges, that company will have to enter into different agreement with different stock exchanges. So there was a problem that these agreements were not uniform. That means if a company is listed in NSE and BSE, that company was entering into separate agreement with NSE and BSE. That is quite usual. But these agreements were not having any uniformity. These agreements, or the clauses in these agreements, were very different. And the second factor was, it was not aligned to Companies Act 2013. That means the clauses inside this listing agreement was Companies Act 1956. So LODR 2015 was enacted to make these two changes. So we'll discuss the concept of listing. So as I mentioned earlier, listing simply refers to admission of securities for dealing in recognized stock exchange. Okay, see, the objectives of LODR 2015, there are two objectives. Number one, to align the clauses of listing agreement with Companies Act 2013. Number two, consolidate and make uniform the conditions in different listing agreement. Okay, so from 2015, when a company is getting listed, it will be having, or it will be entering into listing agreement with the recognized stock exchange, and the contents of that stock exchange will be, content of that listing agreement will be in aligning to Companies Act 2013. Okay, then we'll move to the applicability of this regulation. So LODR is applicable for companies which are listed on main board, SME exchange, institutional trading platform. So normal listed companies. Then non-convertible debt securities, which are listed. Then non-convertible redeemable preference shares, perpetual debt instruments, perpetual non-cumulative preference shares, Indian depository receipts. Okay, securitized debt instruments. So LODR will be applicable for these kind of instruments. So this is specified in Regulation 3, which explains the applicability. Okay, so now we will move to certain obligations or certain regulations which are applicable or which have to be complied by all the listed companies. So one of such regulation is regulation number 6, which explains about the compliance officer and obligations. So the provision says that every listed entity will have to appoint a qualified company secretary as compliance officer. So listed entities to appoint qualified company secretary as compliance officer, and this provision is not mandatory for mutual funds which are listed on recognized stock exchange. So the provisions related to regulation 6 is applicable for every listed company. Okay, but it is not mandatory for mutual fund which is listed on recognized stock exchange. So this is not mandatory for mutual funds. Okay, then the responsibilities of compliance officer, we have already discussed this kind of provision in our Companies Act we might have gone through section 205 of Companies Act, the functions of company secretary. So ensuring compliance of provisions in true letter and spirit, ensuring accuracy of reports, statements, then monitoring email of grievance redressal division. Okay, then we'll move to regulation number 7, which is share transfer agent, appointment of share transfer agent and registrar to issue. See, the share transfer related activities in a listed company can be either done by in-house. The secretarial department of the company can undertake such actions, or it can be delegated to share transfer agent or registrar to issue. See, this is mandatory when the number of securities are exceeding 1 lakh in a particular company. Okay, so when the securities are exceeding 1 lakh, it is mandatory to appoint share transfer agent, or the company will have to get itself registered as category 2 share transfer agent. So activities related to share transfer can be done in-house, or they can appoint RTI and STA, registrar to issue share transfer agent. So if number of security holders exceed 1 lakh, it is mandatory that they have to appoint RTA, STA, or they can either get itself registered as category 2 share transfer agent. So compliance certificate to be submitted to stock exchange within 30 days from the end of financial year. So compliance certificate to be submitted to stock exchange with related to appointment of share transfer agent and registrar to issue. So if there is any changes in registrar to issue or share transfer agent, that will have to be intimated to SEBI within 7 days. So that is related to regulation number 7. Okay, now we will move to regulation number 9 of LODR. This is also to be complied by every listed company. So the category of documents, a company, listed company should be having a policy for preservation of documents. See, we have already discussed in section 128 that the company's documents or the books of accounts of a company will have to be preserved for 8 financial years preceding the relevant financial year. Correct. Okay. So in listed company, there should be a policy for preservation of documents. They can classify the documents into 3 categories. It can be number 1, which will have to be preserved for lifetime permanently, preserved for minimum 8 years, which have to be preserved for a period less than 8 years. Okay, so they have to have a policy for preservation. It has to be kept in electronic mode. Okay, then the classification of documents, it can be documents which are to be preserved permanently and preserved for minimum of 8 financial years. These 2 provisions are mentioned in regulation. So we can have one more classification, like we can have some documents which have to be preserved for less than 8 financial years. So that is about regulation 9. Okay. So now we will move to regulation 13 of LODR, grievance redressal mechanism. So every listed entity will have to get registered on SEBI compliance redress system, which is known as scores or any other platform. Okay, so they have to file with our recognized stock exchange within 20 days from the end of quarter. They have to submit certain detail to recognized stock exchange. See, the company will have to get itself registered on scores or any other platform. If there are investor complaints pending in a quarter, that will have to be intimated to recognized stock exchange. So they will have to submit a report quarterly by this method. They have to show the number of investors complaint at the beginning of quarter. So outstanding complaints, then received during the quarter will have to be added to that, then disposed during the quarter will have to be deducted, and the remaining figure, after adding and deducting, the remaining figure will have to be submitted to stock exchange. So if there were 10 outstanding complaints at the beginning of the quarter, now in this quarter we have received 7 complaints. So the total will come to 17. We have disposed 12 complaints. So we will be having a balance of 5 complaints. Okay, so that will be intimated to recognized stock exchange within 21 days from the end of quarter. Okay, now we will move to corporate governance regulations which are specified in SEBI LODR. So first we will be discussing the provisions related to board of directors. So almost all the provisions might have been discussed in your Companies Act syllabus. Okay, so in board of directors, board to have a optimum mix of executive and non-executive directors. Then at least one woman director to be there in company. Then top 1000 listed companies to have at least one independent woman director. Then top 2000 listed companies to have minimum 6 directors on board. See, in 149 subsection 1 we discussed that in public company there should be minimum 3 directors on board, but for top 2000 listed companies which is based on market capitalization, they should be having minimum of 6 directors on the board. Okay, then board to meet minimum 4 times a year with a maximum gap of 120 days, which we have already discussed in 173 subsection 1, number of board meetings. Then quorum will be 1/3 of total strength or 3 directors. In 174 we discussed that quorum is 1/3 or 2, whichever is higher. Now it is 1/3 or 3 directors, whichever is higher for these kind of listed companies. Okay, then maximum number of directorship in listed entity is 7. A person can become director in maximum 7 listed entities. In section 165 of Companies Act we discussed that a person can become director in maximum 10 public companies, but in regulation 17 it is explaining that that person can become director in maximum 7 listed entities out of 10 public. So maximum number of independent directorship 7. Then if a person is MD or whole-time director in any other company listed entity, he can be independent director in maximum 3 listed entity. Okay, so normal the limit is 7, but if the person is MD or whole-time director in any listed entity, the limit will be reduced to 3. Okay, so now we will move to the provision related to number of independent directors which is required on the board. So if the chairperson of the company is non-executive director, minimum 1/3 to be independent. If chairperson is executive director, 50% to be independent. If the chairperson is non-executive director but he is related to promoter, minimum 50% to be independent. Okay. Then we will move to the provisions of audit committee, regulation number 18, which we have already discussed in section 177 of Companies Act. Minimum 3 directors, 2/3 to be independent, all the members to be financially literate. In Companies Act it specifies that at least one member should be expert in finance and every member should be able to read and understand financial statement. One member to be expert in finance and accounting. Then chairperson to be independent. Minimum 4 meetings in a year, maximum gap of 120 days, and the quorum for meeting would be 1/3 of total strength of audit committee or 2 members, whichever is higher, including 2 independent directors. Okay, so the provisions in SEBI regulations will be more stricter than which is mentioned in Companies Act 2013. Now we will move to NRC, Nomination and Remuneration Committee, Regulation 19. Minimum 3 directors, 2/3 to be independent, chairperson to be independent. They shall meet at least once a year. Quorum will be 1/3 of total strength of NRC or 2 directors or 2 members, whichever is higher, including 1 independent director. Okay. Then stakeholders relationship committee. See, in Companies Act it specifies that if a company is having more than 1000 shareholders plus debenture holders plus deposit holders plus any other security holders at any time during a financial year, they will be required to form stakeholders relationship committee. But in SEBI regulation LODR, it specifies that if it is a listed company, it is mandatory to have stakeholders relationship committee. Chairperson to be non-executive, minimum 3 directors including 1 independent directors, and they shall meet at least once in a year. Okay. Then risk management committee. So this is applicable for 500 top 500 listed entities on the basis of market capitalization. They will be monitoring and reviewing the risk management plan. They shall meet at least once a year. Okay. Then now we'll move to vigil mechanism committee. Vigil mechanism committee, as you know, it is to report victimization or to report genuine concern of employees or directors. So that committee will be having the direct access to chairperson of audit committee. Okay, but in Companies Act we have a separate threshold: listed companies, then companies which has accepted deposit from public, then companies having outstanding loan borrowing from bank and PFI in excess of 50 crore. Okay. Now we will move to regulation 23, related party transactions. Okay. So in Companies Act, when we were discussing section 188, we discussed that in related party transaction there are two approvals. One is board's approval, another one is ordinary resolution, right? So ordinary resolution will be required when the transactions, aggregate or individual transaction, is exceeding certain threshold. For example, if the transaction is related to sale, purchase or supply of goods or material, the threshold is 10% of turnover. Okay. So if the transaction, individual or aggregate, is amounting to or exceeding 10% of turnover, ordinary resolution is required. In other cases, board resolution will be required. Okay. So under regulation 23, it specifies that all related party transaction requires audit committee approval. Omnibus approval may be granted by audit committee. For ordinary transactions, omnibus approval may be granted. Related party will have to abstain from voting. Then material related party transaction, that is transaction which meets or exceeds certain threshold, will be requiring approval of shareholders. So we will move to what is material related party transaction. So when the previous or proposed transaction in a financial year exceeds rupees 1000 crore or 10% of turnover, whichever is less, it is known as material RPT, related party transaction. Okay. Then now we'll move to corporate governance requirement with respect to subsidiary. Okay. So if a company, listed entity, is having unlisted subsidiary, that unlisted subsidiary will have to comply certain provisions. So material subsidiary is a subsidiary whose income or net worth exceeds 20% of consolidated income or net worth. So we have to calculate the consolidated income or net worth of that holding company and subsidiary company, and if the subsidiary company's share in income or net worth exceeds 20% of the total, it is known as material subsidiary. Okay. So we will discuss the provisions which will have to be complied by the material subsidiary. So number one, at least one independent director of the listed entity to be on the board of unlisted material subsidiary. Okay. Number two, audit committee to review the financial statement of unlisted subsidiary. Then minutes of unlisted subsidiary to be placed on board meeting of listed entity. Listed entity to monitor all the significant transactions of unlisted subsidiary. So please note that this provision will be applicable for any subsidiary which is not listed. Okay, unlisted material subsidiary will have to undergo this provisions. Okay, then passing of special resolution is required for disposing shares in material subsidiary to less than 50% or ceasing control. When the holding company is planning to seize the control or sell shares in subsidiary company, special resolution will be required. Second, selling or disposing or leasing assets amounting to more than 20% of assets of material subsidiary in a financial year. Okay, for these two transactions, SR will be required. SR is not required if the same is by a scheme of arrangement duly approved by court or tribunal. If selling of shares or disposing of assets is due to any order by court or tribunal, SR need not be passed. Okay. Now we will move to obligation with respect to independent directors. We have already discussed about the maximum number of independent directorship, which was 7. So cannot serve as independent director in more than 7 listed entities at a time. It will be reduced to 3 if the person is MD or whole-time director in any listed entity. Tenure is 2 terms of consecutive 5 years, which we have already discussed in Companies Act. SR is required for second term, and minimum 1 meeting of independent directors to be conducted every year without the participation of other directors. So that is about Regulation 25. Now obligation with respect to directors and senior management, Regulation 26. A person can become member in maximum 10 committees across all the listed companies. Okay, then cannot be chairperson in more than 5 committees. So for this provision, for this regulation, only membership and chairmanship in audit committee and stakeholders relationship committee will be counted. Okay, then other corporate governance requirements. Company listed entity will have to submit quarterly report on corporate governance. This will have to be submitted within 15 days from the end of quarter. Details of material related party transaction to be disclosed in the statement. Okay, so this is also a quarterly compliance which will have to be complied by listed company. Okay. So now we will move to prior intimation to stock exchange related to board meeting. If you are planning to conduct a board meeting, you have to intimate stock exchange about board meeting. If it is related to financial result, it should be intimated 5 clear days before meeting. Then proposal of buyback, voluntary delisting, fundraising, declaration or recommendation of dividend, issue of convertible security, you will have to intimate 2 clear days in advance. So for financial result it is 5 clear days, for others it is 2 clear days. Okay, so now we will move to the provision of annual report. Okay, so listed entity will have to publish annual report in stock exchange and website, to be published to stock exchange and website. Then it should be a copy to be sent to shareholders along with notice of AGM, but not later than day of commencement of dispatch to shareholders. Okay, then business responsibility report to be prepared by top 1000 listed companies. Okay, then annual information memorandum to be submitted to stock exchange under Regulation 35, annual information memorandum. So it is Regulation 36 is about circulation of financials and other documents to shareholders. It has to be sent at least 21 days before AGM, just like section 136 of Companies Act. Okay, then transfer, transmission and transposition of securities. Transmission means if a person is expiring, legal heir is becoming the owner of shares, that is transmission. Transposition means if joint holders are there, first holder is being changed, that is known as transposition. So powers may be delegated to committee or compliance officer or RTA and STA. Okay, so transfer to be made in 15 days and transmission will have to be made in 7 days. Okay, then meeting of shareholders and voting, facility of remote e-voting to be given to the shareholders of listed entity. Okay, so these are the provisions in SEBI LODR, Listing Obligation and Disclosure Requirement Regulation 2015. So some of the regulations are common which will have to be complied by all the listed entities like Regulation 6, 7, 13, etc. Okay, others are to be complied by certain listed entities. Okay, so corporate governance regulation starting from 17, Regulation 17 will have to be complied by certain specified companies. Okay, so one thing you have to note from your examination point of view is that you will be getting a question, or you may expect a question like what are the quarterly compliance of listed entities, what are the yearly compliance, etc. Okay, so from this regulation you can group some quarterly compliance, like grievance redressal mechanism, it is quarterly compliance. Then appointment of RTI, STA, it is an annual compliance from 30 days from the end of financial year. So you can expect such kind of questions for the examination. Okay, I think the discussion is clear to everyone. So we will be meeting in the next session with a different topic. Thank you.